Here's something wild. According to recent surveys, over 60% of working Americans can't accurately explain what's on their own pay stub. You probably get one every 2 weeks or every month, deposit it, and move on with your life. But what if I told you that understanding every single line on that document could save you hundreds or even thousands of dollars? That's what we're covering today. Your pay stub is basically a financial transparency report. It shows you exactly how much you earned, what got taken out, and what you actually get to take home. And trust me, once you understand it, you'll feel a lot more in control of your money. Let's start with the basics. Your pay stub typically has two main sections: earnings and deductions. At the top, you'll see your gross pay. This is the total amount you earned before anything gets taken out. If you make $50,000 a year and you're paid bi-weekly, your gross pay should be around $1,923 per paycheck. Think of gross pay like the full pizza before anyone takes slices. It's the complete amount before anything is removed. Now here's where it gets interesting. Right below gross pay, you'll start seeing deductions. First up is usually federal income tax withholding. This is money the government requires your employer to hold from your paycheck. How much comes out depends on your W-4 form, which you filled out when you started your job. The more dependents or credits you claim, the less gets withheld. People often ask me if they should change this. Well, if you're getting a huge tax refund every year, you're actually giving the government an interest-free loan. Consider adjusting your W-4 to get more money in each paycheck instead. Next, you'll typically see Social Security and Medicare taxes. Together, these are called FICA taxes. Social Security is 6.2% of your gross pay, and Medicare is 1.45%. Your employer matches these contributions, but you only see your half on your pay stub. If you make over $200,000, there's an additional 0.9% Medicare tax that kicks in. This stuff funds programs you'll likely benefit from later in life, so it's important to understand it. Then, there's state income tax. Not every state has one. If you live in Texas, Florida, or Wyoming, you're lucky and you won't see this line. But if you live in California or New York, state taxes can really add up. Some people don't realize that state taxes exist separately from federal, and it catches them off guard. Now, let's talk about something that could actually help you save money: pre-tax deductions. The big one here is your 401k contribution. If you're contributing to a 401k, that money comes out before federal income tax is calculated. That's huge because it lowers your taxable income. So if you contribute $500 per paycheck to your 401k, you're not just saving for retirement, you're also reducing how much in taxes you owe right now. It's like getting a mini discount on your taxes just for saving for the future. Health insurance premiums are also usually pre-tax. Same deal. This money comes out before taxes are calculated, which saves you money overall. If you're paying $300 every paycheck for health insurance, you're saving roughly $90 in taxes on that contribution. Not nothing. Then you've got post-tax deductions. These come out after all taxes have been calculated. Things like life insurance, union dues, or contributions to a Roth IRA might show up here. These don't reduce your current tax bill, but some of them, like a Roth IRA, can save you money on taxes down the line. Finally, you get to net pay. This is the number that actually matters to you. It's your gross pay minus everything we just talked about. This is your take-home pay, the amount that hits your bank account. This is the number you should use when budgeting. Here's my biggest tip. Actually look at your pay stub every time you get paid. Check that your gross pay is correct. Make sure deductions haven't mysteriously changed. If you see something you don't recognize, ask your HR department. I once caught an error where my old health insurance deduction was still being taken out even though I'd switched plans. It would have cost me thousands if I hadn't noticed. Your pay stub is also a snapshot of your current tax situation. If you're paying way too much in federal tax, you can adjust your W-4. If you're not putting enough away for retirement, you can increase your 401k contribution. Knowledge is power, and your pay stub gives you the information you need to make smart money decisions. So here's what I want you to do. Grab your most recent pay stub and actually read through it using what you just learned. Leave a comment below and tell me what surprised you most about what you found. And if you have a money question that's been bugging you, drop it in the comments too. I read every single one. Like and subscribe for more real talk about your money, and I'll see you in the next one.